This is Alan Farley from FX Empire. Let's take a look at some stocks, cryptos, and ETFs to watch this week. First up is Netflix, which reports earnings on Tuesday. Taking a look back, the stock broke out above resistance at 400 in 2020, got up to about the 575, 580 level, entered this rising channel pattern that broke to the upside just about 2 weeks ago or 3 weeks ago. Now the stock is really on the move. It's got a lot of controversy and production going on with Squid Games and a controversial Dave Chappelle special, and it's right up here at a new high. However, growth has lagged in the past few quarters, and if they didn't make their numbers here in the third quarter, the stock could very easily drop back below this black line and trap breakout buyers. Moving on, let's take a look at IBM. IBM reports earnings this week as well. Now, if you take a look back at IBM, you'll see that we have a very long downtrend after the stock topped out in 2013. We have a number of failures to break this downtrend. Returned to it in June. It returned to it once again just about a couple of weeks ago, and it's right up at this trend line as we go into earnings this week. Now, the stock is spinning off legacy operations in the fourth quarter, so we might finally get a breakout, especially if they're optimistic about the new faster growing spinoff, and finally get IBM moving back towards its historic high. Now, third up is Tesla, which also reports earnings this week. Tesla just cleared its year to date, 1 year here. Yeah, this is nice. It just cleared the 786 retracement up here around 823, and it did it very, very quickly. So it creeped right up to this in this rising channel and then took off above it. So, I mean, the road is clear for a trip up to the 900 level and test of the prior high. Now, Tesla's been really good about supply constraints. It's been able to overcome them, but any discussion about those constraints or China problems could weigh on the stock. Now, that isn't expected, but Wall Street isn't particularly bullish on the stock, with a median price target down in the 770s or so. Now, taking a look at crypto, let's take a look at Ethereum, which is ETH/USD. Now, Ethereum came up to the 786 retracement in September, sold off to the 382 retracement, comes right back up to this prior high. Now, this is a critical zone. As you can see, this also lines up with the 4,000 level. So what I would do is probably buy a breakout over this prior high, or if the stock comes down here to about the 3,800 level, you buy a sell-off, you sell short a sell-off down through about the 3,700 level, looking for a trip to 3,400, even down to the 2,800 level. Now, last up is the United States natural gas ETF, which looks great if you're looking at it in a short-term chart, but if you go back, it looks just plain terrible. In fact, take a look at a 5-year here, and you can see here on a weekly chart that UNG has come back up to this long-term or weekly 200-week moving average. Now, this is significant resistance. Now, the reason it's taken so long is the stock's done 3 reverse splits in the past 10 years or so, and so these big price moves aren't as big as you think, because the all-time high on this chart is like over 1,000. So it looks like, especially we're getting a nice sell cycle here on the weekly chart, that this rally could be over for now, especially if we don't get really, really cold weather in Europe, and we also have Russia trying to cut a deal with Europe on natural gas. So it may be that this triple in price since the all-time low right around here the rally may just be about over, prompting very profitable short sales, perhaps into the end of the year, perhaps down to the 13 level.